The Mortgage Minute today being brought to you by Ron Siegel, brought to you by Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They do not tell us what the APR is, points paid, points received. All Optimal Blue, OBMMI, from Black Knight tells us is what rates locked at on Friday with consumers across 42% of all mortgage transactions nationwide. 30-year conforming loans locked at 7.207, down just a little bit. 30-year jumbo loans locked at 7.535, up a little bit. 30-year FHA loans down 6.989. 30-year USDA loans 7.017. That was up a little. Actually, that was up pretty good. And the best loan on the market, that's for the veterans who earned it. 30-year VA loan 6.874. That was down just a little bit. And if you want this information, what our thoughts are, no guarantees here, what our thoughts are on mortgage rates, you can actually get that emailed to you each morning, rsrmarketminute.com, rsrmarketminute.com. And I will share with you, we tell you what our thoughts are. Again, we don't guarantee it. Now, if the person who had the most control over this can't tell you what's going to happen precisely, how would you think that I could tell you or anybody else? Jerome Powell has the most control over mortgage rates of anybody on the planet, and he can't tell you exactly what's going to happen either. So why would you think that I have a crystal ball on there? But I can tell you what's going on right now. 10-year Treasury down 8 basis points, 4.1256. The S&P 500 up 4.82. Mortgage-backed securities are down 42 basis points. That means interest rates are down a little bit as of right now from what Friday's numbers are or were. And let's talk about that part, because how about what's driving these? Well, Case-Shiller Home Price Index, I talked about this before. Case-Shiller Home Price Index is the gold standard for appreciation, showed that home prices rose 0.65% in June. Home prices have been on the rise since January, are now flat from last June. Remember, last June was the peak in home prices within the report, meaning that home values have risen back to their highest levels on record and will likely eclipse them in July. A lot of the cities that were high flyers in 2022 and then got hit the hardest during the move lower in home prices are showing leadership once again. Many of the cities like New York, Chicago, Cleveland are leading the way in home price gains. So as I mentioned before, don't look at what's going on median home prices. Look at something like Case-Shiller, or my preference is FHFA. Now, Case-Shiller is a little bit older and more comprehensive. FHFA, they measure home price appreciation on single-family homes with conforming loan amounts. That's different than Case-Shiller. Case-Shiller does not, or the FHFA does not include cash buyers or jumbo loans. FHFA reported that prices also rose 0.3% in June and are up 2.9% year over year. They're now almost 3% above last year's peak and continue to set new record highs in home prices every month since February of this year. Based on this, you can interpolate FHFA is stronger than Case-Shiller because there are cash discounts being offered where buyers paying in cash are able to command a lower price. FHFA is on pace to see 7% appreciation for the full year of 2023. Pretty strong numbers right there. Looking at the charts that we have, and we could share them with you later, home prices are still going up. Case-Shiller, FHFA, CoreLogic, Black Knight, Zillow, all showing appreciation in home prices. Now, what else is driving the bond market right now? The BLS, Bureau of Labor Statistics. We're going to get their numbers. I think it's coming out on Friday this week. So we know that there's inaccuracies in the report. How do we know that there's inaccuracies within the report? Well, we get their adjustments down the road. Non-farm payrolls for August. Clearly going to be the highlight of this week with a consensus of an up 170,000 for the headline and the jobless rate to stay at 3.5%. But we have to take note how bogus these numbers are. In the year to last March, we all saw where bonds were selling off after each monthly jobs report. And next thing you know, the QCEW data comes out and we find out that we have on our hands is a 306,000 downward payroll revision. Not to mention that payrolls have been revised each month this year and by a total of 278,000 or 46,000 per month. In fact, when you adjust the data for the skew from the birth-death model, the shift from full-time to part-time workers, the contraction in the work week, and the dramatic increase in multiple job holders, which is a case of double counting, there's been no job growth at all between March and July, and adjusting for these dynamics takes the unemployment rate to 4%, not 3.5%. In other words, there already is more slack in the labor market than meets the eye. There actually has been no growth at all since January in the index of aggregate hours worked. It's been flat for 6 months, and yet we supposedly are into some sort of economic resilience. And while everyone gazes at 5.9% for third quarter growth out of the Atlanta Fed, nobody seems to notice that the St. Louis Fed comparable is less than 0.5%. As we've been saying, we think the weakness is going to show up in the headline job numbers, maybe even as soon as this Friday. This is important because we believe the Fed needs to see a weak headline figure to stop raising rates. We also got the job opening and labor turnover showing openings in July. The index over the last 2 months fell from 9.5 million to 8.8 million, which is a huge drop and the lowest level in 2.5 years. This was bond friendly. It helped the bonds this morning. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Make the call, 800-306-1990, 800-306-1990.